Hey traders, and welcome to the trading channel. As you can tell by the title, in today's video we're going to be talking about a brand new strategy that I'm in the process of creating tutorials and creating a full course for. Now this strategy is the strategy I used in order to get involved in the trade you see in front of you on the New Zealand yen, which is currently up over 180 pips. So what we're going to talk about today is the analysis that goes into making trades like this, and the analysis behind the trade is a very important part, and that's what you have to learn first. But after learning the analysis, your basic structure analysis of the Forex market, that's when you can start to incorporate your own set of rules and conditions in order to create strategies like I've done. And these rule-based strategies are what is going to make your life as a trader much easier. When you have a rules-based strategy, you no longer have to guess at when to get in and out of the market. You have a certain set of rules that tell you exactly when you can enter and exactly when you can exit your positions. And this makes life much easier, guys. It makes it much easier to control your emotions, and without a rule-based strategy, you are going to find it very difficult to become a profitable trader. So if you're struggling, then make sure to keep it locked on this video. As I said, we're going to be discussing the analysis behind the New Zealand yen trade, and I'm going to talk to you guys a little bit about that brand new strategy. And we'll also be discussing another trade on the pound yen that was entered using a similar strategy. So if you're new, make sure you click that subscribe button to be alerted when I come out with new Forex educational content. Click that like button for me while the intro and disclaimer roll, and I'll see you guys on the other side. Alright guys, welcome back. So let's go ahead and jump right into it, and let's discuss why I thought the New Zealand yen would move in the upwards direction. Why did I decide to buy the New Zealand yen? And we're going to start off with looking at the structure, which is what I always try to do. I always look at structure-based analysis first before using any of my strategies. I like to see what the market's telling me without any indicators on the chart and without looking for actual entry reasons before I do anything else. Now starting off with, we're looking at the structure of the New Zealand yen. And what can you tell about this structure? If we hide where I opened the position, do you see anything odd about this? Anything that would give you an indication that the market may want to go higher? Well, I do. As you can tell, previously we were making lower lows, followed by lower highs, followed by a lower low, lower high, lower low, lower high, and then we get a higher low. Now that's not very significant. As you'll notice back here, we had this lower low. We're looking at the top left of my screen. We had a lower high. Here we had a higher low, but the market did not continue up. So what's the difference in this situation here that we're looking at? Well, in this situation, after getting our lower low, the market did something that it has not done since being in this downtrend. And that is, we broke above a resistance level. There's a resistance level that we've broken above, and after that we did something even more major that gave us even more of a clue that this market might want to continue in the upwards direction. And that was, we broke above our other resistance level, our next highest resistance level here. So we've now broken and closed above two previous resistance levels. Now if we continue looking at the chart and moving over, you can see that we did it once more. After that third break and close above a previous resistance level, that's when I really started thinking that we may be heading in the bullish direction. So for that reason, I decided to start looking for bullish trading ideas, and for the specific strategy that allowed me to enter this trade here on the New Zealand yen. Now as you can see, there would have been many different ways to enter this trade. We could have entered on a flag pattern after the break of a previous structure level. We could have entered on a pullback trade, looking at our swing low here up to our swing high, and entering the market at a 50% pullback, depending on the entry reasons we got down on the 1 hour chart. And just to make this video a little more educationally valuable, I'm going to go down to the 1 hour chart and see if we actually had an entry reason around that 50% mark. So yeah guys, you could have used that 50% retracement and this double bottom as an entry reason, And guys, the reason why I'm pointing this out is because I don't want anyone feeling like they have to purchase that course or purchase the brand new strategy that I'm coming out with in order to be profitable or to take advantage of pullbacks like this. After you understand structure and rules-based trading, you can create your own strategies. The only thing the course and the training that I'll offer will do is shorten your learning curve. So as you can see, you could have waited on that pullback to 50%, got involved at that double bottom, and you would have been well on your way to being extremely profitable in this specific trade. So jumping back out to the 4-hour chart, as you can see, this was a swing trade on a 4-hour chart, guys, and this is something that I've really come to enjoy in my trading, and that is trading on higher time frames like the 4-hour or daily chart. Now, there are some of you who would love to be stuck behind your computer all day. That's what you really enjoy doing. And although I really enjoy trading, I don't really enjoy being tied to my computer to the point that I can't go do anything. I can't go out to eat for lunch with friends or family, and I have to be confined to the computer, or at least confined to my household for the entire day. And that's why I decided to be a swing trader, trading on these higher time frames where as long as I'm around a computer or a laptop within every four hours, I can successfully execute any of the strategies that I trade. And it's that same way with any strategies that I teach, such as the new strategy that I'm going to be releasing the course on at the end of this week that allowed me to get in this trade here on the New Zealand yen. So let's go ahead and take a look at one more pair before we end this video. The next pair we're going to take a look at is the pound yen. And on this pair we had a very similar trading opportunity. And again, we'll zoom out the charts. Let me delete a few of these lines. Sorry about that, guys. And actually, let's take a look at a daily chart here on this specific pair. And when it comes to reading structure, we're going to do the same exact thing, guys. So we'll ask ourselves the same question here. Why did I consider a long opportunity more beneficial than a short one here on the pound yen? Well, if you'll look with me here, you can see that the pound yen has been in a major downtrend. So again, as I've asked before, why would I be considering a long opportunity? Well, during this downtrend, as you can see by looking at these lower highs and lower lows, that I'll go ahead and point out for you, lower high, lower low, lower high, lower low, equal high, lower low, lower high, lower low, lower high, lower low. And I'm probably going to cut some of those out because that was a lot of lower highs and lower lows. But after that, as you can see, we have this resistance level here. We have this resistance level here. And what happens to those two resistance levels? They both get taken out by a very impulsive move up. So with that being the case, it switched my mindset from being bearish to being bullish on this pair. Once we broke above these two resistance levels, not only that, then we pull back, push up, pull back, and we get pushed very hard off of this support level here. And I'll actually zoom in a little to make it easier for you guys to see. So we did break below, doing a false breakout to the downside, but then we pushed right back above this level in a very impulsive manner, all the way up to this resistance level. And I know a lot of you are saying, well, the market was right at a daily resistance level. Why would you want to trade there? Well, the thing about these daily resistance levels and any resistance or support level is that there normally is a reaction to it. Now, that doesn't necessarily mean that the market's going to go down. When I say reaction, I mean the market can get really volatile around support and resistance levels. Because if the market's pushed down from this level, of course, we're going to see a pretty big move down. This was a major resistance level. But if the market breaks above this level, then we could see a very large push up, because that would be considered a breakout of a daily resistance level. So with that being the case, and taking a look back down on our 4-hour chart, with that being the case, and with my strategy telling me that I could go long, my rules-based strategy telling me that I had an entry reason, I decided to go ahead and go long here on this pair. Not only that, I also had more than a 1-to-1 risk reward to that daily structure level. So even if the market did stop there and push down, I had over a 1-to-1 risk reward to that level. And to make this easier to see, guys, I'm actually going to drop down to a 1-hour chart, which is where we placed this specific trade. And as you can see, I had more than a 1-to-1 risk reward to that daily structure level. The market has given me reason on higher time frames to believe that it might want to head higher, and I had entry reason based on one of my strategies right in here. And guys, this is going to be a rules-based breakout strategy that I'm going to do a course on as well. And you may be thinking, why do I need a course or rules for breakouts? I know how to trade breakouts. You wait for a move up and then a flag pattern and then another move up, right? Well, that may be the case, but unless you have specific rules for every aspect of this strategy, you're going to have a hard time being consistent with it. So as I said, guys, it's not that you actually need a course to show you how to trade breakouts and how to trade trend continuation, but it can dramatically shorten your learning curve and keep you from having to try to create strategies on your own. So I just wanted to share those two trades with you guys. I hope you got some value out of this video. I hope it helped you to understand how to better read structure before placing trades. If you're interested in any of my courses or programs, feel free to click the links in the description below this video, or the little cards in the top right corner will also have links to my website. And before I go, guys, if you'd like to be alerted when those courses come out, or if you'd like to be alerted when I run promotional offers on any of my programs or courses, and if you'd like a free butterfly pattern tutorial for those of you who are interested in advanced patterns, then you can head over to my website at thetradingchannel.net and scroll down here until you see join our mailing list today. Go ahead and put your email in for the mailing list. So I hope all of you enjoyed this video. As I said, I hope it brought value to your trading. If this is your first time on my channel and you enjoyed this video, don't forget to hit that like button and make sure you subscribe if you're interested in being alerted the next time I come out with free educational content here on YouTube. I hope you all have a great rest of your day, and I'll talk to you guys soon.
Like me, it drifts away. I would watch you stare. I would watch you stare. Oh, but there's no one there.